Hello, Anthony.
Hello, Claudine.
We're here today talking about offers and compromise. Offer and compromises?
That's right.
IRS offer and compromise.
And how they really work.
Yes.
Really work. And in celebration of that, I'm wearing my special offer and compromise shirt today to demonstrate how invested we are in showing how much this really works.
Really?
Yeah.
Now, what is an offer and compromise? It's an option to pay your IRS tax debt for less than what's owed.
Right.
We'll talk about why the IRS would accept less than what's owed in a couple moments. But first, let's touch on tax bills can get huge.
That's right.
I think sometimes people feel overwhelmed. They're afraid to contact us. How did I let this happen? But it really, we're finding the amounts can add up very quickly. Penalties and interest obviously can add up very quickly. Your income can vary from year to year.
Incredible amounts. That this is sort of one of the things that does bother me about sort of popular culture is that this idea that there's this rich group of people who every year are making the same amount of money year after year. And that's not really the way it is. You have good years, you have bad years. So a lot of people have years where a lot of money, then negative a lot of money. And so that's something that happens a lot. And in situations like that, tax problems happen. And it's really, this is, because it can get so huge, this is really one of the big reasons why the offer and compromise program really exists. It really does exist. And there really is an incentive for the IRS to settle for what's less than owed. And I know we're going to get into that a little bit.
Yeah. Now, we find a lot of small business owners can get into tax trouble quickly.
Yep.
You're not having someone take care of the withholding for you.
In any situation where you're not responsible for your own withholding for your taxes, that's where you're going to run into a tax problem.
Yep.
And that's what most people don't understand. The lay public can't understand. How could someone end up in tax trouble like that? Wait a few years. You'll see. It's going to happen to you.
Yep. Other issues we've seen here that can, make tax bills sort of get out of control. Lawsuits, medical issues, fires, floods, accidents, your business is downsized.
Something that happened that you didn't expect.
Yes.
I mean, and let's just assume that you did, you have been making money steadily year after year after year. Okay, this is how you think the future is going to be, and you're living a lifestyle that suits what you're making, and then something happens that you don't have control over, and you're not sure how to deal with it, and then sort of your taxes are sort of the last leading indicator of something that went bad.
Yep.
Yeah.
Now, the IRS has something called a realistic collection potential. We want to quickly define, so a lot of these things will start to make sense.
Because if this is one of the keys to understanding why the IRS would take less. Now, you could say realistic collection potential, but I think anyone watching this would better know it as blood from a stone.
How much do you really have to give? Right,
because they can't get more than you have.
No, and they will look at your entire story.
Yeah.
All the information that you're going to send to them. Another reason why they're willing to take less than what's owed is the Statute of Limitations.
Yes.
They know that if their tax bill is not paid within the first 2 years, there's a really good chance they're not going to ever get their money,
or not get it paid in full. They know that 2 years is when they're really looking to get it paid in full. If not, they're going to take a beating on it. Now the thing is, and then they have a limited amount of time to collect.
Yes,
it's 10 years.
Used to be 6.
And it used to be 6, but then Congress, with no one from Congress asking for it, just decided to give them more to 10 years, which really wasn't a great thing for the IRS because now you're just kind of keeping things on the books that should have been written off. So it is, really hasn't helped the IRS the IRS effectively allocate resources. And we see this with revenue officers because there's not enough revenue officers to handle cases as we're going along. So it was something that, Congress got the idea, this will be free money. And I'm sure there was somebody who had to think this is going to raise X billion dollars in revenue. And of course, it doesn't work out the way that some congressperson claims it will. Imagine that.
So how does it really work? What are the things the IRS is looking at when it comes to an offer and compromise?
They're looking at how much you owe.
Yep.
That's the first thing. And then they're going to look at what your realistic collection potential is and how many years are remaining on your statute. And then there's some formulas to look at how many months you're going to multiply your RCP by. Yes. And sometimes, and I would just say this is sort of the fundamental understanding of an offer and compromise. Look, if you're just going to take your numbers and put them on, if you're just going to write them down, you really didn't do anything. You're just basically filling out a tax form. And that's the way a lot of people just associate it. Hey, look, this is just another IRS tax form. It's like a tax return. Just put in some numbers. But it doesn't work like that.
No.
If you're really looking for the best deal, you're probably not going to go with your facts the way they are.
Yes.
Right? Now, of course, we don't want to lie on any of this because
No.
people go to prison for false claims and not putting assets on there. By the way, the IRS has asset checkers. So if you don't put something on, they're going to say, oh, wait, you left this off. Why was that? So something that you do see, and this happens a lot when someone's unemployed or they're in a rough patch, that they should be in the best bargaining position. Okay, they really should be like, okay, this should be a slam dunk. But the way you put your things down, you're actually not giving the IRS a basis to say like, look, this is the significant change that's in my life. This is my new realistic collection potential. They'll look at your old, if you don't handle this right, they're going to look at your old income and impute that as, oh no, this is what you can afford to pay this in full. It happens all the time. This is when people call us. We look at what they submitted to the IRS. We're looking like, yeah, I could see why you did this completely wrong. You've wasted this entire time because it's taken 6-8 months a year to get to that point.
Yep.
So they've wasted a bunch of time. You really need to start thinking of this as a legal claim, like you're making a legal claim. And sometimes you want to wait a little bit, adjust some facts, do some planning, and you want to know how the IRS is actually going to look at things. What can you do? And I mean, if you're doing, one offer and compromise a year or a life, your own, it's really not going to do it. And if you're not doing a lot of these, it's not, you're just really handicapping yourself. The offer and compromise acceptance rate is overall 40%. Right. And I would actually say it's better than it used to be. But then I wonder how many people are overpaying on their offer, because there's some things we look at. The IRS pre-qualifier, and I'm just going to say that's a joke.
Oh, don't use it.
Don't use it, because we've run, because when that came out, the IRS was like, oh, we have a new IRS offer and compromise pre-qualifier. So I said, okay, fine. I'm going to take some offers and compromise that we had accepted. I'm going to put all of those numbers in there. And they would come back like, oh, no, this offer won't get it. No, you can't even make an offer. You're going to full pay this tax liability 100%. I said, wow, that's funny. The pre-qualifier is telling me this, but I'm looking at this offer and compromise acceptance and a happy client that says something completely different. So that offer and compromise is just a basic calculator. I'm not sure if there's anything sinister behind it, but I'm just going to tell you, it's going to lead you to the wrong conclusion, where one, you don't think you qualify for an offer and compromise, or two, you're offering way more than you should. And I don't think that, our goal, you may have to pay something to the IRS. I don't want people to hire us because we're guaranteeing them that we're going to save you the most amount of money.
Yes.
The reason why we want to save you the most amount of money is because you need it for something else. And also the reason why we want to save you the most amount of money, because this is what happens so many times. People overpay the IRS, run up a new tax liability. So they settled the old one, but then they don't have a new one.
They think they're in the clear. Oof,
right.
Took
and
care
they
of
never,
that.
and so now they're back in the same thing. And this happens years after years after years.
Yep.
And if you are new to an IRS problem, this might be some news to you, but if it's not handled right, this could be something that hangs around with you for 5 years, 10 years, 20 years, and this really can ruin you if you don't understand the factors that go into place of how the IRS sort of frustrates itself from actually ending it. And how you might frustrate yourself, and you might get bad advice that sort of just leads it to going on and on.
Can I toot our own horn?
Yeah.
So the overall success rate for offer and compromise being accepted is 40%.
Yep.
IRSMedic, our success rate is 95%.
Yeah. And that 5% that wasn't, where those were pushes. We were like, well, this doesn't, really stand
Let's try it.
much of a chance. There was, I think, I can think of one where we actually didn't think it was a push. That didn't work out. And we found another solution in that case. And that's the other thing, too. There's other solutions, and the offer and compromise might actually not be your best one, because if you think about it, right, your offer and compromise, you got to pay something to the IRS. Well, there's other ways you can pay nothing to the IRS. So the IRS is taking this offer and compromise because it's in their best interest.
Yes.
They know they have this account receivable that, we don't know if we're going to get, look how much this person owes. What's it really worth? And now you're giving them something. So it's a good deal for you. And if anybody's listening to this is in his business and you have accounts receivable, if you have an accounts receivable that's 6 years old, right? And someone's going to give you $1 for it, sure, because you're probably limited by your time you could even go. You're like, oh yeah, I'll take that in a second.
Yep.
So that's sort of the same way. If someone hasn't paid you in 6 years, This husband hasn't paid you in 3 years. Like, yeah, I think I'll take that because I'm really not going to get anything. So it is a good deal for the IRS. That's why it actually is a work. And I know some people think out there like, oh, this is too good to be true.
Yeah.
Well, the bad news is you owe a lot of money. So that's the bad thing. So it's not too good to be true.
Yep.
It's just the way things really work. And I would say going back to sort of how you want to structure things and just don't put down, and this is, it happens a lot in the tax resolution industry, people who don't really know how to argue for a better position, people who aren't advocates, they just go, hey, fill out this form.
Yes.
Send it in. So if you're doing that, your tax resolution form is just like, hey, fill out this form 656, the offer and compromise form, and you're just filling it out. No.
No, and I think a good example of this is we've seen taxpayers and they send out, this is their offer.
Yeah.
It's a package this thick. It's maybe one envelope. We send out an offer and compromise. It's this thick.
Yeah.
We supply that much more information to tell the whole story.
Because an offer and compromise is an audit, not just of your income, but also your assets. So that's really how you have to think about it. And if you give them everything they need to answer all their questions, they're going to rule in your favor. But if you give them half a story or something that leads them to another conclusion, we see those rejection letters all the time and we beat them all the time. We beat them all the time. Sometimes we'll appeal it, or sometimes we'll just say, you know what, that offer stinks. We're going to let it die. We'll file a new one that actually that's going to win. And I would say one example is this happens a lot. If you owed $500,000 to the IRS. Okay, imagine that, Claudine. And now you also have $500,000 in stock, retirement, cash, whatever.
Okay.
Do you think you could file an offer of compromise on that?
No.
No.
I have $500,000.
Yeah.
I should just pay it in full.
You might be a little too young if you were to file an offer of compromise. But if you were older,
yeah,
or if you had some sort of medical condition, I'm telling you, then this is where the pre-qualifier will completely give you the wrong result. We've done this before. People have owed substantial amounts of money, but when you look at this is all the money you have for the rest of your life. Oh, it's really not all that much money. Okay, let's take a look at that picture, not this picture of this snapshot that says you're a millionaire or whatever. No, that's the wrong one.
Yeah.
We're trying to get a realistic picture of what your life is going to look like. What's the sense of making a taxpayer destitute when they'll just go on state aid or federal aid?
Okay.
So if you think about it like that, that's really some of the protections you can do. And there's other things too in other situations. You just don't want to go with the facts as they are. You want to create facts that help you.
It's not just raw numbers.
No. And it's just not filling in a form at all.
Okay. All right. Well, if you need help with an offer and compromise and find out if it's the best option for you, don't hesitate to contact us. info@irsmedic.com. For more information on our firm, services, and fees, you can visit irsmedic.com. You can like and comment below, and you can also subscribe to our channel for more awesome tax updates. Thanks for watching. IRSMedic, the law offices of Parent LLP. Real tax attorneys for tough tax problems.